Over the past 9 trading days, AMC has had 7 green days, 2 very small red days. 2 of those days were over 10% gainers, and 2 of those days were over 5.5% gainers. Guys, we're looking at some incredible things that I think personally are going to be happening this week, and I'm not going to hold back at all. I want you guys to have my full input on this situation because we are seeing some very stark similarities to pre-January rally to what we are going to see, in my personal opinion, heading throughout this week and the next couple of weeks. So I'm going to lay it all out for you guys, give you guys a price target to go over. And for those 2 red days, if you are unfamiliar off of the top of your head, we were only down 0.26% March 17th and also down 2.46% on March 24th relative to what some other stocks have done in this time frame. Nobody can deny that AMC has a lot of strength and a lot of bullish momentum going for itself right now, but this is only where the puck starts, not where we are going to end. So we are going to get into all of this key information and much more, like the data that you need to know heading into this week. What's going to be happening? What's the federal funds rate? What's going to be going on? Let's get into it. Hit the like button, subscribe to the channel if you guys have not already. Thank you guys for doing that. All of that helps to push this video out to more people so we can get more people in the ape community. Also, if you guys want to come trade with me as well as a ton of other traders, check that link out pinned in the top comment. Nonetheless, let's get into this video. Now, before we dive into the technical analysis and all of the data that you need to know, I want to say that you should definitely stay until the very end of this video because there's a lot of value out of it. And you can't look at one data point, you really have to tie them all together to come to a conclusion. That's what I like to do on these Sunday videos. So let's get into it. And if you guys are unfamiliar, AMC was up 31% in the last week. So this is a big green week that we are coming off of. Some people would say, hey, AMC is ran too hard, too fast. And I would argue against that we're only really at the levels we were at in February. We're not much higher than that. We actually touched right here at $21. February 10th came down, and then obviously the rest is history. All the fear, the war, and all of that happened, right? So we're not even recovered to those levels that we were at even back here in January. We were much higher than this, in the 20s or 30s. It's much different when you're looking at a stock that is even off of its 52-week highs dramatically. AMC well off those 52-week highs, but it's not too far off where it previously was. And we're seeing a lot of other stocks, like look at something like Tesla, look at something like Apple. They're getting substantially almost all the way back to their all-time high. So to say AMC couldn't rally more just because we've seen a 31% positive week doesn't make a whole lot of sense in my personal opinion. But let's get into the technicals. What I'm really loving about this situation and what the parallels are between now and January, first and foremost, right now, or I shouldn't say right now, but during this whole, war debacle, this whole situation where AMC at $12.90, that was really the most depressed level we have seen for AMC stock in a very long time. Really, ever since we've seen the first rally back in January, the most pessimistic people that were talking bad about the stock. You've seen basically a falling knife of AMC stock price. That's what you've seen just before the January rally. Now we're rallying off of that bottom. So that's a quick parallel that you can really put together here. A lot of bearish sentiment overall. I think my dog just choked. But a lot of bearish sentiment overall before the rally in January, as well as before this rally that we are seeing right now. And this rally really started after the Fed. So a little bit different. Obviously, the Fed didn't kick off that rally, but it's important to know that AMC is still a part of the stock market. So if something happens like a black swan event, a nuclear weapon, or something crazy goes off, I think it's crazy to think that AMC would not have some kind of downward effect based off of that, because the algorithmic trading programs, they are what control stocks. Let's be honest here. That's what controls stocks. Besides with these little rallies that you guys see, and potentially shorts covering, until that happens, which we have not seen that happen at all, shorts have not covered, then you're definitely going to see the broad markets, any huge bad news, play a role in potentially what will happen with the stock. But let's look at January, what the price action was looking like in January. And I think I zoomed in way too far on that. Yeah, let's look at January. So I really want you guys to pay attention to this 50-day moving average, this blue line right here. So we were under this 50-day moving average, which is where we have been for a very long time. We just broke above the 50-day moving average. Now what happened? You bounced off the low a little bit. You came up. You broke out past the 50-day moving average. Here at about $3 per share. You went up. You came back down. You went up. You went up. And you stayed for a second, and then you hit the 100-day, and then you started to make bigger moves to the upside. This process took about a week from the time that you actually, a little bit over that, from the time that you actually broke out above the 50-day moving average, and until you started to see this real rally kick in, right? So it took a little bit of time. Not a long time, a little bit of time. Now, if we go back to what we're actually seeing right now, and if you, just imagine this real quick, right? You went down, you came back up a little bit, little sporadic rallies in here, came back down to lower lows. Well, if we pull the chart and zoom back out again, what are you going to notice in here? It's almost the exact same picture. The exact same. The exact same. Look, you just went down, right? You come back up, those two little humps came down to a lower low, and now you're starting to rally again. We just broke out above the 50-day moving average 1, 2, 3 trading days ago. Let's go back for anybody like me with a short-term memory loss, right? All right, little smooth brain apes in here. We get it, we get it. No hate, no hate. Look, same thing, right? Let's zoom this, make the candles a little bit bigger. You come down, you go up, and then you come right back down to lower lows. And then the boom, boom candles start. And then they really start. And then you see that major rally. And you 10x in value. It looks pretty damn similar to me. Next stop, in my personal opinion, is going to be that 100-day moving average. Likely coming this week. You will see some resistance around there like we seen back in January. Let's go ahead and look at this rally again, just so everybody is very clear. You've seen a little bit of resistance around the 100-day moving average. Again, that's the orange line that you are seeing right here. You've seen 1 day of resistance, and then you gapped up above that the next day. A 25, almost 26% rally the day after. So if that plays out the same, and we get 10x in value, going from $1.91 to $20 per share, a 10x, then where would that put us from now? If we 10x'd in value from $20 per share, just call it $20 per share, you're going to be sitting at $200 per share for AMC stock. Now, I'm not going to go out and say that's my price target, $200 per share by the end of this week. No, it can take a little bit of time, like you guys seen, and history doesn't always repeat itself, but it usually does rhyme. And just looking at this right here, I want you guys to look at this, where we came down. You've seen the little rallies, the 2 rallies in here, came down, hit a lower low, and then started to make that move up. I think the difference here, which maybe why we are not seeing that 10x right away, which, consider it's been a nice rally, but I think you're seeing a little bit of a slower reaction this time around because you do have the Fed that is really fighting us here. What the Fed is doing is not really helping our situation, whereas back in January the Fed was at our backs. They were helping the markets. They were basically giving you every reason in the world to buy stocks. But this whole pre-run up is looking very, very similar, and AMC actually now has a lot more green candles than what you even seen before the rally in January. So I don't know, maybe I'm crazy for drawing this conclusion here, for really even bringing this up. Who knows? But I think it's very telling. And go back to what I said, a lot of trading is done by trading algorithms. So if history is any guide here, and I don't think it could be any more clear, a clear indicator of what we are about to see, I have to put my price target in between the 100-day and the 200-day moving average, in this range, in between $24.66 per share and $33.37 per share. And what's the best thing out of all of this? Shorts have not covered at all. I have not seen one day where the return shares were higher than the borrowed shares, even on days we were up 13, 15, 17, 20%. You haven't seen that, not even for one day. So regardless of what other people have said, they obviously don't know shit. Shorts have not covered in a substantial way. They've actually done the opposite and continue to short the stock like they did back in January as well. So it's very hard here to draw any differences in a substantial way from what we're seeing now comparatively to in January. So leave your thoughts on that down below in the comment section. As far as the short interest of free float, 20.78%, cost bar max of 3.54%, utilization of 100%, in the days to cover at 2.89. For whatever it's worth, the current shares that are estimated to be sold short of 107.08 million. Obviously, we know there's a lot of fraudulent shit that does go on, and not all of the shares are accounted for. As far as the options as well, something that I want to make sure we talk about here in this video, over the past week, you've seen 262 orders totaling $123.91 million, positive order value of 81%. On Friday, you've seen 53 orders totaling $22.07 million, positive order value of 92%. These are institutional investors. These are your whales. These are very large single positions. They're not retail investors. And like we've seen in January and in June, you had basically a battle going on. And I made videos about this at the time, that there was hedge funds that were betting long on the stock as well as going short on the stock. But another difference here along those same lines is that the shorts are really at a huge disadvantage now because of the liquidity crisis that you are seeing, the increase in margin requirements, specific collateral that is no longer usable, interest rates going up, margin rates going up. It's not looking good for the short sellers. And I can sit here and make this claim and stand on this claim. If I'm wrong, I'm wrong, but this is only what I am seeing, and I'm not going to be the guy that's afraid to tell you what I am seeing because I think some people will get mad at me in the comment section. Fuck the people that get mad at me in the comment section. I don't give a shit. This is for the people that want the raw data exactly how it needs to be told, and that's what I did here in this video so far. Now, before we conclude this video, because I realized that it's going to be a 35 minute long video if I go over the news, federal funds rate, what has happened over the weekend, what's going to happen this week as far as economic data, the things that we usually do, go over the hedge fund stuff that I wanted to talk about. It's going to be a very, very long video. People get mad at me for 20-minute long video. So we're going to keep this one a little bit short, sweet, and straight to the point. We'll go over all of that in the video at 4 o'clock today. So if you're interested in that as well, come check that out. But I do want to go over how I plan to trade AMC as far as options are concerned for this week. And I want to kind of mix up my strategy here. So what I mean by that is I want a little bit more of shorter term exposure, maybe some of the April 14th contracts, but I might do something like a debit spread here. So essentially what a debit spread is you would buy like the 127 contract, and then you would sell the 128 contract. So essentially what you would pay would be the difference between these two, which $113, you bought that, you sold this one for $102, you collect that $102, so it would cost you $11 per contract. Well, you make your max gain of $100 per contract, and you can do one contract or 20 million if you wanted to. You make $100 per contract as potential max profit if AMC stock is above $27 by April 14th. That's the short-term exposure here. That would be 1,000% gain. The bad part is if AMC went to $100 per share by April 14th, you would still only make 1,000%, $100 per contract that you did have. So I'm looking to do something like that. You could even go out, buy the 29 for 95, sell the 30 for 90. It would cost you $5. Still, you'd make $100 per contract. That would be a 2,000% gainer, right? So you can change this up, but that's called a debit spread. So I want that a little bit more for short-term exposure. They will hold value a little bit better than just buying a naked contract. Now, what I plan to do as far as naked contracts, because I think the price of AMC could go higher than $30 here in the next month or so, I do want to go out to something like the May or even possibly the June contracts and probably go out to about $35, maybe the $30 contracts as well. Whatever makes sense, not super close to the money, but not super far out of the money as well. I want a lot of that potential move to the upside to get priced into the contracts if it does come, like I think it will, here in the next couple of weeks. So I might do the $30 contracts. I might buy a couple of those. There's a lot of open interest at the 30. It's about 9,000 so far. So that should be a good sign. It looks like institutional investors, they are buying the $30 contracts as well. So that looks very appealing, as well as the 35s. They might be good, but I'm really looking at the $30 contracts as of right now. I would set stop losses on these. You know, if you buy them for 180, then maybe set a stop loss at 140 or 130, so you're not getting totally screwed on your position if something crazy happens, a black swan event, Russia launches a nuclear weapon at Ukraine, something crazy, anything can happen. I can't foretell what will happen around the world, so I don't want to act like I can here in this video, but those are some strategies that I plan to personally implement to capture some of this rally in AMC stock. I also want to point out the fact that on Friday we barely closed positive, up 1 penny, 0.05%, but in after hours seen a substantial rally, up 1.68%. So I am very excited with the data that was provided to you guys. I hope you are as well, but source your comments, questions, or concerns down below in the comment section. Like the video, subscribe to the channel, and also get your free stocks down below in the description. When you sign up for Moomoo using my link, you will get 3 free stocks as well as an additional free share of NEO upon you depositing a singular dollar. $1 will get you like a 10,000% return. So definitely check that out if you guys are not a part of Moomoo already, and if you guys want to come trade with us and get access to all of my trades when I make these trades that I'm pointing out to you guys, come join the trading community. Link down below in the pinned comment. Thank you for watching, and I will see you in the next one.